Due to popular demand and the fact that people have been asking for this video for a while now, I wanted to dedicate a video to sharing my thoughts on the supporting reasoning and data on where we are in the market cycle specifically for Vechain and VET, and whether I think that we are in a bubble or fairly valued or even below fair value and actually underpriced. And I just want to make it very clear that whenever we are talking about these kind of price predictions or evaluation videos, in order to make certain conclusions we have to use personal judgment and personal opinion. Given that there are so many voids in our information which can't be filled with reliable data, it's simply unavoidable. And of course people will disagree with me, and that's absolutely fine. I always love hearing from people who have a slightly different outlook on the situation to myself, or even people that think that I'm just totally wrong. It's a great way of engaging in constructive debate, and it's a great way of maybe pointing out things which others have overlooked or missed altogether. Anyway, in order to ascertain whether VET is in an asset price bubble right now, we have to first determine what an asset price bubble is, and what marks the line between a bubble and non-bubble situation. And unfortunately, like many other things in investing, it's not so clear-cut, and you may very well get a different definition depending upon who you ask or where you look online. In my opinion, the most sensible line which marks an asset price bubble and non-bubble is a point after which the price of any asset becomes unsustainably high. And what this means is that the value of the asset is so high in relation to the opportunity cost which it represents by owning that asset and not owning the other things which I could buy for the value. For example, by owning one Bitcoin at $50,000 per unit, I have to ask myself whether I'm getting a good deal by owning that Bitcoin, or would I be better off with the cash that I could get from selling, or is there something else which I could buy with the sales proceeds which is better than owning this one Bitcoin? And when the price of any asset crosses a line after which the majority of people are likely to want to cash out and trade in because the opportunity cost of owning that asset is so high, in my view that asset is in a bubble. And of course this is a very subjective and very tough to pin down line, and it will differ from investor to investor. By owning that Bitcoin, I'm effectively an owner of any gain in the value of that Bitcoin in the future, but the cost of owning it at say 50k is not being able to own $50,000 worth of any other investment, or anything else that I'd rather own. And so the line after which an asset enters bubble territory differs from person to person, because it's reliant upon the individual's judgment and appraisal of the opportunity cost in ownership. For example, I may think that Bitcoin will reach $1 million over the next 10 years, and so as an investor, for it to be worthwhile for me to sell my Bitcoin, I'd have to have another opportunity which I expect to deliver a return of over $1 million on a risk-adjusted basis, within a similar time frame. But if another investor thinks that Bitcoin will only reach $100,000 over the next 10 years, then they will likely be willing to cash out in favor of another deal which they expect to generate $250,000 over the next 10 years. And so for one investor $100,000 may feel too expensive and therefore overvalued, but for another it may seem cheap and undervalued. The way that I try to think about when it's likely that the majority of people will just say okay, the opportunity cost of owning this asset is too high and there is better value elsewhere, is by considering how much better I can do and how obvious it is. For example, not long ago I sold my entire stock portfolio because the income return was around 3% per year, and it had become painfully obvious that I could easily do better than that in real estate or crypto. And so to me my stock portfolio was obviously overvalued relative to the available alternatives. But on the other hand, Vechain and actually VET have a staking yield of around 5% per year, and the potential for price appreciation in my opinion is very strong as well. And in today's low-yield environment, 5% per year isn't that bad, and it's actually very rare in assets which have a good potential for appreciation as well. Most of the companies which offer high dividend yields do so because the companies themselves are either growing very slowly or even dying, earning less and less every year, and so they have to offer a comparatively high dividend yield to give some financial incentive to own that stock. But then on the other hand, companies with good prospects for high levels of growth, which tend to be technology companies, usually don't offer any dividend at all or very small dividends, because they know that the potential for growth in itself is enough of an incentive to own the stock. And so you can see why a good yield and good potential for growth is an inherently rare combination. And again, a few weeks ago I got to a point where I decided to sell my entire stock portfolio, because it was just obvious that I could beat that 3% annual return quite safely. And to me at that point the value of my index fund holdings were in a bubble, as I felt that the prices were unsustainably high relative to what else I could get for my money in terms of an investment income. But when I look at VET and I think to myself, if I were to sell the VET at the 5% yield that I earn today or thereabouts, would I be able to find a candidate with a better rate of income and which has better prospects of growth and the same level of risk? And remember that yield alone doesn't mean anything. I could buy a random crypto that ranks 4,000th in terms of size and market capitalization, and maybe I could do 100 or even 1,000 to 1. But then again, if there is a 95 or 99% chance of permanent loss, it doesn't mean anything. And I for one would struggle, and in fact I don't think that I even could choose a crypto which has obviously better prospects than Vechain, with the same level of perceived safety. I just don't think that the opportunities exist, and if they do, they definitely aren't obvious to me, and I'm sure to most of the crypto investors as well. And so from this perspective, I don't think that VET is in a bubble at all, and looking at certain other cryptos and certain other stocks, I think that VET is far more conservatively priced than many other investment candidates out there, and has a much stronger yield and a stronger level of projected growth than others. And given that I would find it hard to find other candidates which I thought had better or the same level of overall prospects than VET from an investment perspective, the only rational conclusion that I can come to is that VET is not in a bubble in my opinion. And maybe other investors will disagree and will think that they can find better risk-adjusted value, and maybe they can. But for the average investor, it's no good in shunning a 15% annual return in the stock market because Warren Buffett has done 20%. We need to look at the long-term average of around 8 or 9% and recognize that the average is what counts in this situation. Be sure to share your take on the situation in the comment section below, and thanks for watching. And also, if you're not yet subscribed to the channel, don't waste any more time or miss any more content, and be sure to consider subscribing. See you in the next video.